Welcome, Peter Schiff, always on the phone, of course, because you are a really famous person in the United States.
Not that famous.
You are a big guy in the media, no? So everywhere in the United States, and even in Zurich, I guess people know you because of your very creative side, and you're really to the point. In 2007-8,
well, that's my book. That book is from 2012, 2013, the real crash.
But you did make your name a very famous name in the United States because you said the right things about the 2007-8 crash, didn't you? So
right. I was warning publicly about the mistakes that the Fed was making under Alan Greenspan, that they had interest rates artificially low, and that the biggest problem was manifesting in a housing bubble, and that the financial industry was way leveraged to this bubble. The whole U.S. economy was consuming debt related to home equity, and that there was going to be a massive crash, a big financial crisis.
We are already in the middle of the core substance. I have to introduce Wolfgang Denk too. Wolfgang and me, we have met a couple of years ago by coincidence. He comes from Germany. He is in energy. He used to be in energy, a risk analyst, and then he switched to finance. That's interesting. The last 5 years, you, Wolfgang, have worked in finance in Zurich as a risk manager. Now you are with a gold seller?
Just last week, yes, I started working also for a small gold retailer.
In Zurich?
Yes, in Zurich,
okay.
Yes.
This place we are here is called the Collina d'Oro. No, it's in Ticino. So you were ready to welcome us. Wolfgang has sent you an email, no? Just got in touch.
Yes.
Wolfgang, you're kind of fan of Peter Schiff. So how comes that you followed Peter Schiff over the years?
Well, actually, I mentioned to you yesterday. I think it was if it wouldn't be for you, I would probably still be working in the energy sector, in the power plant sector. I just became a fan after the financial crisis. Also, I started thinking about the risks in the financial system. And I came first reading Financial Times and all that. I came more and more in the internet to discover your books, and
so
I got more and more interested.
In the internet, and then you thought it's interesting what he says. And now we start with a very actual headline. Wolfgang, you bought the paper. We came down by train from Zurich, and it's ECB, so the Central Bank of Europe, of course, who says the inflation target is no longer close to 2%, but it's more or less 2%, a little bit higher, a little bit lower. So what does that mean, what ECB said right now?
Well, they're basically admitting defeat because they're saying they can't keep inflation below 2%. But they're pretending like it's some kind of victory or it's good news, like, hey, we got this new policy, now we're going to target inflation at 2%. So what used to be a ceiling is now the target. But the real concern should be how long before it becomes a floor? How long before we can't let it get below 2%, right? It has to be above. And then if 2% isn't the ceiling, is there a ceiling? What about 3%? What about 4%? Right? So, and they've already opened the door. And this is not the first time that they've moved the goalpost, because the original mission of the ECB was to have inflation below 2%, meaning that 1% was good. 0.5% was better. But then they changed it to below but close to 2%. For some reason, 1% inflation was no longer desirable. If it was 1%, we needed to make it 1.9. But now why is it better to have your cost of living rising by 1.9% per year versus only rising by 1%?
Okay, 1.9, 2% is not to worry, So, but maybe it rises further. I think that's the concern.
Well, the reason they're making this change is because they know that the inflation rate is going to be above 2%, and based on the old mandate, they would be expected to do something. But rates are at zero. They don't want to raise them. So they have to change the rules of the game in the middle of the game. And now it's like, okay, if it goes above 2%, we're not going to do anything. Now, okay, well, how much higher than 2% can it go? See, they're not really saying. They're saying, well, it's okay if it gets marginally above. Well, what does that mean exactly? Is 2.5? Is that too much? Right? Where is it? But they're never going to really specify it because they don't want to box themselves in, because they can't raise rates to fight inflation. That's the same box the Fed is in. Although the ECB actually is more in a position to do it than the Fed, because the debt bubble in the U.S. is even bigger than the one in Europe, and so the Fed is even less able to fight inflation.
So now we have now several topics. No, I guess one of the topics he just raised, Peter, is the debt bubble and the dollar.
The inflation. Yeah. Well, my question on that would be like, isn't this now also sort of an admission that they know it's not transitory? Because then otherwise they wouldn't need to change their policy if they know it would be in a couple of months it would be okay again. Aren't they admitting sort of, or they see data that it's not transitory, the inflation?
Well, they're still kind of saying it is transitory because they're not worried about a move above 2% if it's just transitory and it's going to come back down. But the reality is, what really should prove to you that it's not transitory is that the central banks, if they had the ability to fight inflation, they would be doing it right now. They would not take a chance that it's not transitory. They would err on the side of caution. Hey, let's start raising rates. We're at zero, right? Rates are never been this low. Inflation is really picking up. Should we really stay at zero and just hope that this is transitory? Because how do you know? You won't know it's transitory until later into the future, and you look back and you say, oh, it was transitory. But there's no way to know for sure. And in fact, based on all the money that's been printed, based on the size of these deficits, there really is no reason to believe that what we're seeing is transitory. To me, it's far more likely that there's a permanent increase in prices that will, continue based on the money that we're printing. And also, if you combine that with the disruptions to supply, because the way, COVID has resulted in fewer people working, fewer people producing. So we're not making as much stuff. We're not providing as many services, yet there's more money than ever to buy them. So it stands to reason that this is not a transitory situation. What we're looking at is the beginning of something big. And in fact, I think we're really just catching up to a lot of the price increases that are the result of the inflationary monetary policies of the past. Because there's always a lag between the printing of the money and the effect that has on prices.
So then they keep on printing, no? I mean,
yes.
There is a time lag and it keeps on.
But my point was, if they could fight inflation, they would be doing it now. The reason they're pretending it's transitory is because they can't. So they have to come up with a justification for why they're sitting by and doing nothing despite all this data. And so their excuse is, well, we're not doing anything because we know it's transitory and the problem's going to take care of itself. We don't have to solve the problem. It's going to take care of itself. Well, it's not going to take care of itself, which means it's never going to get solved because the central banks, especially the Fed, can't solve it. Because
why not? Why can't they solve it? What is so impossible to solve it?
Well, whenever you press, let's say, Powell about, what will the Fed do if it turns out that inflation isn't transitory and it gets too high? Then he says, well, we have the tools. We'll take care of it. No, they don't. I mean, they have the tools. It's kind of like saying, if the only tool I have is a handgun, and am I going to use that to cure my headache? I don't think so. The only way the Fed could fight inflation would be to raise interest rates north of the inflation rate. So let's say if they let's say they don't do anything and then inflation is 5%. Okay, we were wrong, we've got 5% inflation. Well, you're at zero on interest rates. You got to get up to 7%, 8% in order to have a positive real interest rate. And how does the Fed bring rates up? Well, it's got to start shrinking its balance sheet. I mean, not just reducing the rate of expansion, right, the taper. They have to start selling treasuries, selling mortgage-backed securities, and shrinking the money supply. Well, how are they going to accomplish that when you have an entire bubble economy that is built on the foundation of the Fed expanding its balance sheet and holding interest rates artificially low? If you shrink the balance sheet and allow interest rates to go up, the stock market crashes, the bond market crashes, the real estate market crashes, everybody gets wiped out, all the debt goes into default, the banks fail, Nobody can bail them out. Now the U.S. government has to default on its bonds because the Fed is no longer monetizing the debt. It now actually has to find real lenders, and they don't exist. So the government is defaulting. Everything implodes to a much greater degree. I mean, it makes 2008 look like a Sunday school picnic. So the question is the Federal Reserve really willing to bring about economic conditions far worse than the Great Depression in order to fight inflation? Or are they just going to surrender to inflation and assume that, well, that's the lesser of the two evils?
And you say they surrender?
Of course.
And if they would do that, it would be very visible to everybody because shortly after or the next morning, everything would crash. Everybody could pinpoint that to them. You did this, right? They would be blamed, basically. That's why they can't do it.
Right.
They can't do it gradually, right? They can, or could they gradually raise rates?
No. I mean, it wouldn't be gradual. The minute the cat would be out of the bag, rates would spiral up, and everybody would say, "Oh, you did this to us," right? Yeah. And of course, politicians and central bankers are really politicians. That's what they are. Their goal is always to delay any bad thing, right? They always want it to happen later because then maybe it's somebody else's problem. Right? There's a new head of the central bank. There's a new president, a new finance minister. Because everybody has a set term. And the goal is just to get through your term without a disaster and just, pass the baton to the next guy, right? And eventually somebody is holding the bag. So you're not going to deliberately bring about the crash while you're in power. You're going to try to postpone it until somebody else is there to be the fall guy. So that's why they're always going to try to inflate. They're just going to keep on doing that until they can't do it anymore.
But does that moment come? For sure. I mean, maybe it doesn't come. Maybe you can just keep on going.
Well, it's impossible. Well, that can't happen, right? I mean, they said that when you talk about, my warnings about the housing bubble and the financial crisis, people said the same thing to me back then. Housing prices can just go up forever. And I said, well, no, they can't. They're going to come down eventually, and then the debts are going to default. That's a law
of nature, or
yeah, I mean, nothing. It can't just go up indefinitely. Something's going to happen. Now, they could have gone up indefinitely if we just kept printing more money, but then it's just nominal prices. The real price would have to come down eventually. The price in terms of gold. But yeah, they could destroy the currency, and ultimately, that's what I think is going to happen. The only way to stop stock prices from crashing, real estate prices from crashing, is to have the currencies crash instead. And, right? and then you don't see it because it's all relative.
This is basically what you're predicting in this book, right? The crash of the dollar.
Right, because the reason I titled that The Real Crash is because when we had the 2008 financial crisis, and that happened after my book came out, my first book, Crash Proof, a lot of people thought that the crash that my book was forecasting was the one we had in 08. It wasn't, right? I forecast the crash in 08 in my book. So that is part of what I said would happen. But the crash that I was talking about was the next one. Because what I wrote about back in 2005 when I wrote Crash Proof was that we were going to have a housing bubble that was going to crash and result in a financial crisis and the worst recession since the Great Depression, 10% unemployment, $1 trillion deficits. All those predictions came true. Then I wrote that in response to this, they're going to print a bunch of money, they're going to slash interest rates, right, to try to reflate these bubbles. And their consequence of that is going to be a dollar crisis, a currency crash. That hasn't happened yet. And, looking back on, where I was back then, I did not think we would get to 2021. I didn't think that we could get to a $30 trillion national debt, that we could have interest rates at zero for so long without the dollar crashing. So that has surprised me that we've been able to get away with it for so long. But because we have gotten away with it for so long, the problems have just gotten much bigger. And so that just assures that the ultimate crash will be that much greater as well.
And it's been accelerating now, no? I recently actually watched the interview that you did with Joe Rogan. I think it was 3 or 4 years ago. And you were looking at the US debt clock. And it said, is it at 20 trillion yet?
Yeah,
no, 3 or 4 years ago. And now you just said we're like almost at 30.
Almost at 30, 28 trillion or 20. It's hard to keep track.
It's been accelerating, or do you see signs? That's like one really question that interests us maybe a lot is, what do you see now that makes you so sure that you're right now on this prediction? Or do you see anything accelerating or after COVID or?
Well, I mean, it's not that I see something now. I mean, I'm sure that I've been right, the whole time. But there are things that are happening that simply reinforce that I was right. Like on the housing, when the subprime bubble burst in 2007 initially, right? That's when subprime blew up, and you had some bankruptcies in the sector, and my bets against subprime, other people's bets really paid off. That was 07, right? That was before the 08 financial crisis. So when I saw that happening, to me that was a validation that I was right.
We've seen some of all those trades in 2007 already? Or?
Oh yeah, they all panned out all the money was made in 07.
So you were all good.
Yeah.
2007.
Yeah, 2000. Yeah, we made 2007 was a great year because of that. 2008 was a different story because everything went down in 2008. Even my gold stocks went down and all that stuff. But 2007 was the payoff on subprime. But what I'm talking about is that in 07, when subprime imploded exactly the way I had been forecasting for all these years, to me that was, okay, yes, this is one piece of my puzzle that is already now filled in to just reinforce the idea that I was right. But if you go back and you look at what the mainstream financial community was saying, including the Federal Reserve, in 2007, early 2008, they were saying, nothing to worry about. This isn't a big deal. Subprime is contained. Everything is fine. The real estate market is fine. The economy is fine. We're not going to have a recession. It's all good, right? And so they didn't understand the significance of what had just happened because it wasn't part of their forecast. It was part of my forecast. So the minute that happened, it kind of reinforced in my mind, hey, I'm right, because this thing has now happened. And that's how I knew it wasn't contained and that what they were saying was wrong. And so, now, they see this blip in inflation and, it's transitory. Well, yeah, just like they said subprime is contained. But to me, what's happening is just validating what I've been saying. And the fact
they were right, no? I mean,
no.
You have just said that you wouldn't believe that it lasts so long, no?
Well, yes.
13 years. So in a way, they have been right until now, and no one knows the future.
But look at what they've had to do to make it last this long. Look at how rates have had to stay at zero or negative rates in Europe. Look at how large the deficits have grown to keep the whole thing together. So this is all part of my forecast. Where I would have been wrong about the whole thing is if the Federal Reserve had actually been able to normalize interest rates the way they said they were, if they could have gotten them back up to 5%, if they were able to shrink their balance sheet like they said they would, back down to under $1 trillion. See, all the things that the Fed said they were going to do, they couldn't do. I got it right. I said from the very beginning in 2008, 2009, they're never going to shrink the balance sheet. They're never going to end QE. I mean, so all the stuff that I said early on has proven to be correct. The only thing that hasn't happened yet is the ultimate crash. But everything else I said would happen has happened, and everything that the central bankers said would happen has not happened. The reverse of what they said. But by doing more of the same and digging us into a deeper hole, they've been able to delay the ultimate day of reckoning. But they're not going to cancel
Ultimate crash, dollar crash. Does it really affect the American people? And you're American, no? We are here in Switzerland, we look over the ocean, and it's all relative. So one of the big guys in politics in the US said once, the dollar is our currency and your problem. So what does it mean exactly, the dollar crashes? I mean, how would that play out?
Yeah.
How
Well,
would it be?
it's actually going to be a positive for many parts of the world, but it will be a major negative for the United States. Because people don't really understand the huge benefit that Americans derive from the dollar and its status in the world. Because without that, Americans would have to produce in order to consume. Right? That's what most people have to do. You can't consume unless you produce. Now, you don't have to produce everything that you consume because you can trade. And that's what countries do. You have economies of scale, you have specialization. So let's say we're mentioning in Switzerland. Switzerland doesn't have any oil, right? If Switzerland had to produce their own oil in Switzerland, I don't know how much oil you'd find here in the Alps. But fortunately, other countries have oil, and Switzerland can make things that those people need and exchange it for oil, right? So you don't have to produce everything you consume, but you have to produce something to consume. And producing things requires effort. It requires resources. It requires work, right? Knowledge. A lot of things have to happen to produce. Now, America, on the other hand, if we want to consume, all we got to do is print up dollars. In fact, we don't even have to print them anymore. We don't need ink and paper. We just create them on a computer, and we can have whatever we want. We could buy oil, we could buy cars, we could buy televisions, we could buy computers. We don't have to do anything. We don't have to make anything. We don't have to cause any pollution. There's no factories. It's really easy. So, and every year, our trade deficit now, and it's not that America makes nothing. I mean, I'm not going to say we don't do anything. But every year, we have about now close to $1 trillion trade deficit. So we get to consume $1 trillion worth of stuff that we did not have to produce. That means we get a higher standard of living. We get all this stuff for nothing. But what does that also mean about the rest of the world? The rest of the world had to produce $1 trillion worth of stuff for which it received nothing in exchange. So America's gain is everybody else's loss. We get to live at the world's expense, right? We get all this stuff, and they get our paper, right? Now, right now they think, oh, this is great. We've got these dollars. Well, what good are they, right? They're just a piece of paper. And so at some point, when the dollar crashes, Americans now can no longer import without exporting. And so therefore we can't import all this stuff. And so now Americans have to do without all these goods, and our standard of living goes down. But that means the rest of the world gets to keep its goods. It doesn't get our dollars, but it gets to keep all of its stuff.
The Americans will come over, no, to Europe and live here.
Well, the Americans won't be able to afford to come to Europe. The Europeans will come to America because America will be cheap. Just like you were telling me that when you had the Deutschmark and you went to Italy and they had the lira, an Italian vacation was cheap. Yeah. Well, an American vacation is going to be super cheap, because the dollar's going to crash and the Americans are going to be poor. But so we benefit right now dramatically. We get this huge subsidy based on our ability to print dollars and export them and run these huge deficits. But it's a burden that the world collectively has to bear. And so when the world no longer has to support America, now the burden is gone. And now the rest of the world can start consuming what they used to give to Americans. And so that's going to be a net positive.
Could you walk us through, you described this from the viewpoint of the US. Could you walk us through how that will play out, let's say, for people living in Switzerland, making their money in Swiss francs? Well, given that we have the Swiss National Bank, what would happen if the dollar loses a lot of value here? The Swiss franc would become stronger?
Well, it would certainly become stronger versus the dollar. Yeah. Whether it would become stronger in absolute terms, in terms of gold, for example, I don't necessarily think so. I think that the price of gold in Swiss francs is going to rise. But I think the main beneficiaries of the dollar's decline, I think, will be more the emerging markets, because that's where a lot of the stuff that we in America import has come from. We have a trade deficit with Switzerland. I forget, we have a trade deficit with, I think, with pretty much every country in the world. But I don't know that it's that large with the Swiss, so much as it is with a lot of these Asian countries that are producing, these mass quantities of goods that we consume. But I think a lot of those countries will see the biggest relative appreciation of their currencies, and therefore the biggest relative increase in their standards of living.
And then China would be number one economy?
Yeah,
in US dollar terms, they would be the number one economy.
Yes, I think that the Chinese economy is going to be the largest in the world much sooner than people think, because a lot of that is going to be a function of the exchange rates. And if right now you're looking at what is like 6.5 yuan to the dollar. Well, let's say that goes to 3 to 1. The yuan doubles in value. That alone would put China number one. Yeah, and of course that means that everybody's income in China doubles in dollar terms. Right now, their savings have doubled in dollar terms. So it's a much wealthier nation on a relative basis to the United States. But of course, if the Chinese currency were to double in value, that would mean that the Chinese businesses, they would no longer need to export as much stuff to America because their own citizens would have all this extra purchasing power. And so the Chinese would then be buying more of what they produce, and Americans would be buying less. And so Americans would have to do without those things.
Is it a little bit like the Romans back then, 2,000 years ago? So the Americans are like the Romans of today? So
well,
they have built up a huge imperium. Thanks to their weapon, the US dollar, they can live like kings and princes, and now they are losing everything.
I mean, America is like Rome in the sense that, Rome was this huge world power and eventually it fell. And the same thing is happening to America. I mean, it's just in a condensed time frame. Rome was around for 1,000 years. And America is not dominating the world for 1,000 years. I mean, I think our peak period has already passed. But the dollar is still, there, and still, so we're holding on to a lot of our power as long as the dollar doesn't crash. But I think that a dollar crash is not only inevitable, but, nearing. And so that will bring the American era, to an end. Now, the question is, can America come back? I mean, it's rare. I mean, China came back. I think China dominated the world at one time. I forget when. It's been a while, and so now it took a long time to come back. But look, Britain is a shadow of what it once was. France, never France. Spain is a shadow. It was once dominant. Portugal, the Dutch once dominated. I mean, so you have periods of time. The countries, they've never come back to achieve that status. So could America at some distant point in the future be on top again? Yeah, it's possible.
Depends on the president. Let's see.
But I think China is going to get such a big lead. It's going to be hard to overtake them. And plus, I think once America falls, unfortunately, a lot of bad things are going to happen to make us poor. Because if you look at the political landscape in the United States right now, socialism, communism, fascist ideas, they won't acknowledge that as fascist, but this type of central government planning, big government, has never been more popular and more widely accepted, nor has capitalism or freedom ever been, less popular. And so to the extent that we have this big collapse in the US, we have a currency crisis, we have a major economic collapse, the odds that we blame it on government and on central banking, and that we emerge from that with, okay, we've had enough of this big government, what we need now is capitalism and freedom, and we're all going to be like Ayn Rand, we're going to go back to the founding fathers, the odds of us going in that direction to me seem pretty slim. What seems more likely is that everything gets blamed on capitalism. This is what happens with too much greed and too much wealth and too much concentration of power. And so we need the government to nationalize all this stuff. We need the government to take control of the means of production. Everybody needs to be equal. And so we're probably going to go through a long period of that.
The Soviet Union.
Yes.
The United States. So
yeah.
We really see that.
I don't know. I mean, when I ran for Senate, I ran, back in 2010. And
you wanted to become a senator?
Nah, I didn't really want to, but I ran.
For which party you had?
I was in the Republican Party. But, one of the questions I would always get was, do you support building a wall, right, on the Mexican border? And the reason I always said no was because my fear was that one day the wall would be used to keep the Americans in, not the Mexicans out. And so this could happen, because if things get bad enough in America, people are going to want to leave. Well, we already know what countries do when they impose socialism, and then people try to leave, they stop them from leaving.
In terms of taxes, you already have that, no? That principle, kind of. If you leave the country, you still have to pay the taxes in the US, right?
Well, yeah, that's unfortunate. The American tax system, it's we tax you no matter where you live, so you actually have to renounce your citizenship, but there's a big tax to do that too.
Easy, or how much does that cost? Or?
Well, it depends on how much wealth you have.
Yeah.
It's a tax on the unrealized appreciation of your assets. But I mean, I live in Puerto Rico right now, so that right now that's a viable solution for me.
You don't pay taxes there, or how does?
Well, I
that
pay much lower taxes, just like a lot of people are living here in Switzerland. There's zero capital gains in Switzerland, but not for me. I mean, for you guys, there's no capital gains. Or if a Canadian moves here and decides to live in Switzerland, they can have no capital gains. But as an American, if I decide to live in Switzerland, even though Switzerland isn't going to tax me with capital gains, the U.S. government is still going to tax me. But living in Puerto Rico is my only out. They say, okay, if you live in Puerto Rico, we're not going to tax you. So I'm living in Puerto Rico. That's
What happened to your senator candidateship when you wanted to become a senator?
No, I lost. There was an election. They didn't vote for me.
Otherwise, you would speak to a senator. Now we speak.
Well, I don't know that I'd still.
Economist, but what happened?
Well, I ran 11 years ago or 10 years, so I would have had to have been reelected, and I'd to a second term. I don't know if I'd still be a senator because part of it was I only wanted one term. I said, like, I'm not going to run for reelection because I didn't even really want to be a senator. So if I was going to do it, it was just going to be like one and done. But the reason I wanted to go, and I only wanted to go for one reason, was to stop the increasing of the debt ceiling, which they're about to do again. We run into the debt ceiling later this month.
Suspended now, no?
Yeah, it's suspended.
At what level, actually?
It was trillions lower. But the suspension runs out at the end of July.
Yeah.
And so they have to agree to raise the debt ceiling or extend the suspension, whatever it is, right? But every time we hit the debt ceiling, we raise it because the politicians vote to raise it. Well, what I wanted to do was stop the ceiling from going up. That's all I wanted to do. Because if I could have succeeded in that, then the government would have to cut spending.
But people didn't like it. Otherwise, they would have voted for you. maybe the Americans want to become a socialist country.
Well,
the thing you described just before.
Yeah, well, socialism is very popular with the people who get the money, right? But a lot of the people who are paying the taxes don't even realize how bad it's going to get. They agree to it, but they don't realize how much it gets abused, to the point that, well, eventually it's like you give them an inch, they take a mile, and maybe, it's okay, they can take 30% of what I earn. The next thing you know, it's 50, then 60, then 70, and so even the liberals are like, end up not liking it. But that's the direction that we're headed. But, it's hard to outvote the people who benefit from the money the government steals, because, there was an old saying, or a famous American, Willie Sutton, who was a bank robber, and they asked him, Willie, why are you robbing banks? And he said, well, that's where the money is, right? Well, the votes are with the masses, the majority of people. So it's always like, we're never going to raise taxes on people who make more than $400,000. That's what Biden say. Why? Because hardly anybody makes more than $400,000. I mean, how many votes do you lose if you raise taxes on the people who make over $400,000? What? I mean, there's hardly anybody. You can lose those votes. So you're always, if you're robbing Peter to pay Paul, you could always count on Paul's support. That is a problem. We got a lot of Pauls, not that many Peters.
I would like to add one more question to the dollar crash or your prediction of what's coming next. If the US dollar crashes, that would have a huge effect also on the treasuries, the 10-year treasury, and that's kind of the anchor of the whole financial system. Wouldn't that mean that the whole system comes apart even worse than during Lehman? And how would they try to keep all of this together?
Yes, I think the entire monetary system, as we know it now, is going to come to an end. Wow. Right, and because the way the monetary system works now is really the dollar is at the center of the whole thing, right? But before the current monetary system, the world was on a much sounder system where gold was at the center of it. And so all of the world's currencies were backed by gold. And so gold was money, and currencies, which were backed by that money, circulated, as money substitutes, but they derived their value from the gold that backed it up. And so we had a very stable monetary system. Then the Federal Reserve, the U.S. government, right, got the world to agree to hold dollars instead of gold. Because after all, America had all the gold, and you could take your dollars and get gold whenever you wanted. It was like a warehouse receipt for gold. And you could take those dollars and buy U.S. Treasuries and earn some interest, which you couldn't do with your gold. So you can have your cake and eat it too. You can have U.S. Treasuries that pay interest, but whenever you want, you can just, redeem them for gold. So we got the world to move off the gold standard onto the dollar standard with the assurance that the dollar was as good as gold. Well, as soon as the world put their trust in us, we screwed them over, right? We defaulted on our promise. Now that we got everybody holding dollars, oh, you can't get any gold. We shut the gold window, so you're out of luck, right? It's like those checks are no good anymore. We're not going to cash them. But you're free to hold on to them. You can do whatever you want with them. But the one thing you can't do is bring them back here to get real money, because we ain't giving you any. So,
and that was in 71.
Right. And that
people 50 years it takes them to understand what happened.
Well, they still don't understand it. But what happened in the 70s is the dollar lost a lot of value, right? I mean, in the early 1970, you got four marks for the dollar. By the end of the 70s, it was $1.50 marks, right? You got 360 Japanese yen for the dollar. By 1980, it was down to like 150, right? The Swiss franc, I think, was like 20 cents in 1970. It was like 75 cents, right? Or 80 maybe. Of course, it's higher now, but that was a big drop during the 1970s. And prices, oil went from $3 a barrel to $30 a barrel, right? Everything went up because the dollar lost value. But then it stopped falling. Volcker came in, jacked interest rates up. The dollar kind of stabilized, And then the world forgot about the reason that they held the dollar in the first place, meaning that it was backed by gold, and they started to hold it just because they can get good interest on it. And so then we have this new monetary system where every currency had dollars as reserves. Well, we've abused that dramatically by printing way too much dollars, and our whole economy, we went from the world's biggest creditor nation to the world's biggest debtor. We went from the huge manufacturing surplus. We used to be the high quality, low cost manufacturer of pretty much everything, that we now import. We used to export cars, consumer electronics. I mean, we made it all in America.
Fridges, Westinghouse.
Look, yeah, and so all that has changed. And so when the dollar crashes, this monetary system doesn't work. And so what's going to replace it? The only thing to me that seems viable is a return to the gold standard, just to go back to the way it was before the dollar, because it doesn't make sense to say, okay, the dollar didn't work, let's replace it with the euro. Well, why? I mean, what's so good about the euro? It's just another piece of paper. The yen, nobody, they're not going to just say, we just saw the dollar collapse, and now we're going to take another fiat currency and we're going to build a monetary system based on it. Well, why won't it? It doesn't make any sense. The only thing that would work would be, okay, we were on a gold standard for a long time. It worked. We went on this dollar standard. It's a disaster. Go back to the gold standard. That's the only thing that makes sense.
But it worked until the 70s. Then it stopped to work.
No. It didn't stop working. We stopped using it. The problem was we went off the gold standard. See, the U.S. government had a choice in 1970. It could have stayed on the gold standard, but it would have had to cut government spending. But it didn't want it.
So it's a method to discipline. The government.
Yeah, the gold standard works for the people. It doesn't work for the government. If the government's goal is to constantly get bigger and bigger and buy the votes of the public by creating inflation, then the gold standard doesn't work. It's like, think of the gold standard as a chaperone, right? And so if you're going to a high school prom, you don't like the chaperone. You want to get drunk. The chaperone is the older person that makes sure that nobody does anything bad, right? No drinking, no sex. It's like, we're going to make sure that it's a orderly
party.
Right. So from the kids' perspective, they don't like the chaperone. But the parents, they love the chaperones. They want to make sure that their 17-year-old daughter, she's going to a party, she's not going to get all drunk and everyone's going to take advantage of her. There's going to be a chaperone, right? So the people should like a gold standard because it keeps the government honest. But the government is like the high school kids. They don't want the chaperone. They want to just print money and run deficits. And so it's not that the gold standard didn't work. It was working perfectly. That's why they abandoned it. Right? Yeah. They basically killed the chaperone.
They couldn't make their games. Is there enough gold for?
Sure.
to go back to the old system? Yeah.
Yes, just not at the old rate. So when we went off the gold standard in 1971, an ounce of gold was $35. Now we devalued a couple times, so I think the last official gold price was like $42. And that's where it is, right? So we could return to a gold standard, just not $42 an ounce, right? So we can return to a gold standard maybe at $20,000 an ounce. I don't know what the price would have to be, but that price keeps going up as we keep printing more money. The price that gold would need to be just keeps getting higher and higher. But it can easily be done,
But that would mean the governments would have to get together and decide, let's go back on a gold standard.
Yes, well, what are they going to do when the dollar crashes? They have to be on some kind of standard. There has to be something.
Try to say we're going to do central bank digital currency now, or
well,
something like come up.
But what is going to instill? But will the public buy it? Will they have confidence in it? I mean,
wouldn't the phase in between now and later on, when you say when everything is sort of calming down again, there would be sort of a phase of a chaos, or
I don't know. Look, you can look at a lot of countries that have had currencies that have failed, right? Like in South America or whatever. What do they end up doing? Whenever they reintroduce a new currency, they always have to peg it to the dollar, let's say, to give people confidence that, okay, the old currency is worthless, but the new one is going to be pegged to the dollar. Yeah, you have to have something to reinstill the confidence that was lost. And so if the dollar crashes, you have to figure out how to reinstill confidence. And so that
peg it to Bitcoin.
No, Bitcoin's not going to create any confidence. Bitcoin will probably crash before the dollar. So that is the ultimate confidence game, right? Bitcoin is all sheer. I mean, what is Bitcoin worth? Nothing. It's worth what someone will pay.
It's always the old game between supply and demand. No, people want to buy it, so it raises. So far,
right,
the
but
ones who have invested in Bitcoin are fine.
Yeah, but why do people want to buy it? Because they think it's going to go up. Well, if people stop thinking that, no one's going to want to buy it. You can't do anything with it. You can't use it for anything. It has no substance. It has no utility.
You mean you can even use a US dollar better than a Bitcoin, because at least there is Silicon Valley, and so buy an Apple, an iPhone.
Right. Well, the one thing that Bitcoin has in common with the US dollar is that neither has any real value, any intrinsic value. But at least the dollar is a unit of account. It's a medium of exchange. It's not really a store of value, but over short periods of time, I mean, it stores value minute to minute, hour to hour, day, a little bit. But I mean, Bitcoin could evaporate overnight. I mean,
But the Bitcoin advocates, they sort of have a lot of similar ideas than in the beginning. But they just come up with a solution is Bitcoin, because they also say, the US dollar it will
right, and it's a very self-serving conclusion, right? Because it's like they'll make all the points that I'm making in many cases, and they'll say, and so you should buy Bitcoin. And they want everybody to buy Bitcoin because they need the price of the Bitcoin they already own to go up. And it's only going to go up if they convince other people to buy it.
Do you have friends that thought very similar than you, and then they turned into Bitcoin advocates, and now you're not friends anymore, or
No, I haven't lost any friendships over Bitcoin.
There were people like Max Kaiser that was kind of pro gold, pro Bitcoin, pro everything, and now not anymore. Or
Max was never really a friend of mine. I mean, I was friendly with the guy only in that I knew him. I had been on his show a couple times, and he says some really mean things about me, nasty things about me now.
Yeah.
So I guess you can count that as to the extent that he was a friend. He's obviously not one now. But all these guys, they're just telling all kinds of lies in order to promote Bitcoin. I mean, the biggest one now is Michael Saylor. And the stuff that he says is so profoundly absurd that, I mean, all you have to do is listen to it, and he says that gold's no good. I heard him he said that it costs 40% to buy gold. When you buy gold, there's a 40% commission. If you sell it, there's a 30% commission. So the spread is 70%. I don't even know where he's getting these crazy numbers. I mean, it doesn't cost nearly that much to buy and sell gold. It's relatively inexpensive. And then he tries to say that everything digital is better than anything physical or substantive, because he says that, well, digital music is better than real music, meaning if I have music, that I can just, distribute digitally, it's better than having a CD, because there's a limit to how many CDs I can produce and I can mail. You can argue with the sound quality. Maybe the sound quality is better. In fact, it's even better if you have an old record and a turntable and a needle. That sound is actually even higher quality. But yes, I mean, you can argue that digital music is easier to disseminate to more people, and he made an argument for digital books, that hey, it's easy if I have to actually publish books out of paper, how many can I print, how long does it take, versus a digital book, everybody can download it. Yes, but then he makes the jump and he says, therefore digital property is better than real property, and Bitcoin is digital property, and so it's better than gold because it's digital gold. And it's like, wait a minute, no, you can't say that. Because you can't, it's like digital food is not better than food, because I can't eat digital food. I can still read a digital book. I can still listen to digital music. I can't eat digital food. Yeah. A digital house is not better than a real house.
But
I can't live.
Your son is in Bitcoin, no?
Huh?
Your own son, your elder
your
son.
Well,
he likes Bitcoin.
Yeah.
So
because he's young and foolish. What does he know? He's 18. But my point is, you can't live in a digital house, right? You can't drive a digital car.
There was this NFT now.
Oh yeah,
about, like digital art, and
that's all. That's just part of the bubble. But my point is, digital gold, which is what he's claiming Bitcoin is no more gold than a digital house is a house, because gold is a substance. Like there's gold in this watch. I can't make this watch out of Bitcoin. But I can make it with actual gold.
So the question is whether people still want to have such a thing like gold.
Well, they do.
Such a watch.
They do. Why do you think they're willing to pay so much money for these watches? But it's not just, like, gold is not just used in jewelry. I mean, that's one of the biggest uses, but it's used in electronics, it's used in aerospace, it's used in medicine, it's used in dentistry, and it would be used a lot more if it was cheaper. Because it's such a great metal, it would be used for all sorts of things if the price was lower.
So we have to talk about your company too, and what do you recommend to people? I mean, you have clients. You have small clients. Like
I was just going to ask.
Sure,
big clients like institutional clients. No, your company is Europe Pacifics. It sounds like Europe, but you're in the United States, and you're talking to the American people, to the investors, to the savers, to the small people, big ones. What do you recommend them to do? How they prepare for the crisis?
Well, for Americans, the advice that I'm giving is to get out of the US dollar and dollar denominated assets, because they're going to lose value. And so you want to take those dollars and exchange them for other things while they still have value. And so I recommend portfolios that are heavily concentrated in non-US dividend-paying stocks. So we have stocks, in Europe, in Asia, in different parts of the world. Companies that I think are fairly too undervalued, where you get a good dividend yield, and the dividends are coming in these currencies that.
What's a good dividend yield nowadays? Would you say?
Well, it depends. 4, 5, 6, 7, 8%. Depends on the company. What they're doing. But the yields are much better than what you get on bonds. The bond yields are low everywhere. But you can buy companies, common stocks that have good income. I also think that you want to own sectors that will, benefit from a, pickup in inflation globally. So concentrating, overweighting, basic materials or energy or things that will be particularly, positively impacted by rising prices. And then, we have a big allocation towards precious metals because of my view of the remonetization of gold and the fact that more and more people will be looking for gold as an alternative to fiat currencies, the gold mining sector in particular. So we have a lot of exposure there, I think. And you also get dividends there. I mean, they're not as good, but we're still getting on senior gold companies, 2-3%. Still, I mean, a lot better than what you get in a bank or on a bond.
They could go up,
yes,
up in value on top of that.
And they can raise their dividends too, right? As the value of the gold they're mining goes up, the price, they can increase the dividends. But for people who are outside of the United States, right, who already don't have a lot of money in the U.S., they may not need to do that. But I still manage money for non-Americans. We manage money for clients all over the world.
They go into your funds?
Well, they can't at this
asset management, or
they can't buy my mutual funds right now, but they can open up an account with me, and I can manage the portfolio in the same stocks that are in my mutual funds. So it's just a separately managed brokerage account, and there, people still need the professional management. They need somebody else to pick the stocks and manage the portfolio. And if you were to go to most of the big money management firms, let's say you go to Switzerland, you get one of the big banks to manage your portfolio, they're going to put a lot of money in U.S. stocks. I mean, they're going to just that's the cookie cutter. Buy all these U.S. stocks.
Buy the NASDAQ.
And I'm like, no, I'm not going to do that. I mean, I think that is not the right way to go. But yes, and if you look back over the past 10 years, that worked great because we had the biggest bubble. But I don't want to bet that bubble just goes indefinitely. I think it's going to end very badly in real terms for the U.S. stock market, just like the housing market that blew up. So if you send money to me from Europe, I'm not going to then put a bunch of your money in U.S. stocks. I'm going to be in Asian stocks or emerging markets or some European. I'm certainly not going to buy U.S. bonds. I mean, that'd be the worst thing you could do. I mean, even worse than U.S. stocks would be U.S. bonds, because the U.S. bonds are going to have basically no value. I mean, stocks are still going to have some value. And of course, there are some U.S. stocks that, are going to be in better shape than others. I mean, the big multinational companies that have a lot of exports. And so a lot of these companies will do all right.
In the end, real assets, no? So stocks is good, it's fine. It depends which stock.
Yeah, and I personally...
It's really physical things. That's basically what I say.
And I think in general, as an asset class, I mean, you could take a company like here in Switzerland, right? I would say that Swiss stocks are much better value than Swiss residential real estate. I mean, just looking at what I would pay to buy a house here or an apartment.
How much rental income you could get?
Versus the dividend yield I could get on the shares. So I would rather own the Swiss stock market than the Swiss real estate market, residential real estate. And a lot of that is a function of, the artificially low interest rates disproportionately impact real estate because so much real estate is bought with debt. Most people who buy stocks don't do it with debt. I mean, yes, you can have margin, but to what degree? I mean, maybe 50% would be a lot. Most people, maybe they're leveraged 10%, 20%. But people buy real estate. I mean, 100% leverage. Sometimes. I mean, it's all borrowed money.
It's
so the prices
from the Swiss banks. Basically, if you talk about Switzerland, that would interest me. What do you think about the healthiness of the Swiss financial sectors, of the banks? The banks live of the offshore clients, like you. You could have a Swiss bank account.
But it's not.
That has become a little bit difficult.
I don't have one now, and unfortunately, Switzerland surrendered their sovereignty on that. I mean, it was the real banking capital of the world because the Swiss respected the privacy of their bank depositors, and which I think was admirable, and I think it's something that the Swiss should have defended. Instead, they just sacrificed it because there was a lot of pressure from the rest of the world because they didn't want their citizens using Swiss banks to somehow, dodge their own tax liabilities at home. But personally, for me, I mean, I think privacy is a very important right. Not because I think that we need to make sure that the criminals' privacy is protected. I want to make sure that the honest people, that their privacy is protected. And you never know, because when governments become corrupt, right? It's the honest people are the ones they go after. right? Those are the ones that become the political prisoners. And so the easier you make it for governments to spy on the citizens, the harder you make it for the citizens to keep the government honest. And so all of this, where you give all this power to the government and surrender all kinds of individual liberties, because you say, hey, this will keep us safer because it'll make it easier to get to terrorists or the drug dealers, whatever. You give up that, but you lose so much more. And you really put the government in position to be very, very powerful. So when the governments become corrupt and the governments are acting unlawfully, you want to be able to have some type of resistance against that. But now the government can label the resistance, oh, these guys are traitors, these guys are terrorists. But they're not, right? They're freedom fighters. They're the honest people. The corruption is in government. So I want to preserve privacy. And, how many people, when you had corrupt governments too, people were able to get their money out and put it in Swiss banks and escape governments who would have stolen the money. The government wants to know where everybody's money is so they can steal it. Well, I don't want the government knowing where my money is because I don't want them to steal it.
You know why Swiss banks have given in that fight against the US? No?
Well, a lot of it was because of the dollar and the SWIFT system.
It was also because the top bankers were afraid that they end up in a US jail. No, we had some court decisions, or we had some Swiss bankers who had to defend themselves in the US. No, because the Americans tried to really put pressure on Swiss banking system, and in the end Switzerland gave in.
Yeah, but also Switzerland, doesn't have to extradite. It's like, okay, so America wants to charge you. Well, we don't have to recognize that jurisdiction. And not that many countries too. Tax evasion isn't even a crime. In some countries it's civil, but it's not criminal like it is in the United States. So you don't have to extradite if you don't want to. And I don't know the particulars about how much individuals that work for these Swiss banks were actively, helping people evade taxes other than simply providing them with the banking services. And just with knowing that their accounts were confidential and private. And it's not just confidential and private from government, it's confidential from creditors or all sorts of people, who might know. But, at one point, in America, we had the same type of protection, but now every financial institution in America is basically an unpaid tax collector and spy for the U.S. government. When I was in the financial service industry, we're all required to spy on our customers and report anything that looks suspicious to the government. The government's got everybody spying on everybody else. And if you don't, right, if you don't spy on your customers, that's criminal. You can go to jail for not doing it. So if one of your customers does something suspicious and you don't rat them out to the government, then you've committed a crime and you could go to jail.
This is worse and worse now. Is there any reversal of that trend?
No.
That will not end, I guess.
No, and people don't seem to appreciate the loss of freedom, the loss of individual liberty that this, that all this is bringing about. All they can think about is, we have to go after drug dealers or money launderers or tax evaders. Really? We have to surrender all of our liberty and all of our freedom in order to do that? We have to make it so, everybody is spying on everybody else?
Why did we go into that direction? Do we human beings like to be like this? Or what is the reason?
Well, look, it's government. Look. Government gets bigger and bigger and bigger, right? And they want more and more power, but they also need more money to operate. And so they have to keep raising taxes to higher and higher degrees. And as you start raising taxes, well, people now don't want to pay. They have to try to find ways to avoid the taxes because they're confiscatory. So now the government needs more power. The more abusive your tax system is, the more confiscatory, the more power you need to enforce it. If taxes were very low, nobody would bother to evade them. It's only because they're really high that people, want to evade them.
But the government will say we build streets, we build schools, we build airports, we have health
but none of that, most of that doesn't cost very much. The big cost of government is the transfer payments, where they take money away from one person and give it to somebody else. The actual cost of the roads, and the school, that's low. And that stuff can be paid for with local taxes. You don't need national or federal taxes, and it can also be paid for with user fees. You want to use the roads, pay the tolls. You want to go to school, it's a private school, pay the tuition. We don't need the government to provide these things because the free market provides them better and cheaper. We don't get anything for nothing for government. If the government is going to provide us with roads, all right, well, now the taxes have to pay for those roads, except the taxes are going to be higher than what the free market would charge me to build roads, because the free market is efficient. Government is inefficient. So any service the government provides will be more expensive than that service provided by a free market in a competitive environment. You're always going to get a better deal from the private sector than from government.
What about Switzerland? Do you still think it's on a relative basis? Would you think you prefer it to the U.S. right now? Or
oh yeah, I would.
How was your experience since you've been here?
If I was a baby about to be born, and I could choose where my parents would live, I would definitely choose Switzerland over the United States. I think a child being born in Switzerland is going to be born into better circumstances than somebody being born in the United States.
Smaller government?
It's less government. There's more economic freedom in Switzerland than there is in the United States. So the Swiss economy is sounder. It's wealthier. Obviously, on a per capita basis, the Swiss families are in better shape than the American families. Now, if I could pick my parents exactly, I could be Jeff Bezos' kid and I'd be in great shape in the U.S. But just, if you can't pick it that much, just randomly, you're just going to get born.
He got into a fight with his wife, so maybe that wouldn't have been so nice as a kid.
Well, whatever. But there's plenty of very wealthy Americans that I could be born into that and I'd be looking good. But, there are a lot of poor American families too. And the poorest Americans are a lot poorer than the poorest Swiss.
Yeah. There was a minimum wage discussion here for 4,000 Swiss francs per month.
Yeah, Switzerland doesn't have a minimum wage. Yeah.
It got rejected by the people. They didn't want it. 4,000 francs per month gross salary. It was a minimum wage suggested. Yeah.
I know, but Switzerland does not have a minimum wage right now.
No.
But the average wage in Switzerland is higher than it is in the United States, and there's no wage.
The living costs are a little bit higher, no? So it's like everything is relative in life. You sounded just before like a revolutionary guy, a strong opinion about taxes. Now this is just a robbery of the government. They take these taxes. I think Wolfgang told me about it. Your father fought such a fight.
He was in jail for a long time, for his beliefs, and I haven't taken that approach. But I do look at taxation as theft when the taxation is not for the general benefit of everybody collectively, and especially in the United States when the taxation is in violation of law. Because the U.S. government has been empowered to levy taxes for specific purposes, and only those purposes. But today, the U.S. government raises taxes to spend money in ways that are not authorized by law. And in fact, the taxes themselves are being collected in violation of law. So these are criminal activities by the government. It's no different. If you guys got together and decided to, beat me up and take my money, right? We would all agree that that's theft. Well, if you voted for somebody else to do it, right, to come take my money and give it to you against my will, how does that change the relationship of what just happened? Just because you guys vote to steal my money doesn't change the nature of the fact that it's theft. Right? I had no say in the matter. You guys got together and took my money. You just introduced a third party, a politician, and he came at a gunpoint because if I don't, hey, give me the money or we're going to put you in jail. Right? So I don't see how that, is any more moral than you just doing it yourself and cutting out the middleman.
But there are reasons where you say it's fine to pay taxes for certain things. You say.
Well, yeah. Well, I mean,
wouldn't oppose to any tax.
Yeah. Well, we say, okay, look, we're all agreeing to live in this society, and because we're all in this society, we need certain things. We need court. Yeah, and the police are going to protect everybody. The courts are going to be here for everybody. And so everybody is going to contribute.
Some social system. For like, let's say, really like unfortunate people. Right?
No. Well, that should be private charity. I don't believe that the government should take money from one citizen to say, look, we're going to collect money to give it to the people that are unfortunate. That should be done by the private sector.
And sickness or illness or like something.
Private sector.
Private sector.
Yeah, I mean, people will be charitable. Doctors will treat the sick. Just go, hey, I'm not gonna let this guy die. People will have charities. People will give money. What you find is, whenever you try to, have government do those functions, it does a very, very bad job, because the incentives are all screwed up, and the costs are very high. So, for example, let's say the government is going to be in charge of aiding the poor, and they're going to just raise taxes to do it, right? So they collect $1, and the poor people get 10 cents, because 90 cents is all the bureaucrats taking a slice of it, right? Everybody's, it costs a fortune. But when you have a private charity that organizes to raise money with voluntary contributions and then give it to the poor, they raise $1, and the poor people get 90 cents. The charity takes 10 cents to administer. So it's far more efficient when people voluntarily give their money to charities, and then the charities...
Do you do that, or would...
Of course!
Do you do charitable giving, or...
Yeah, I do. I do, and a lot of people do, and of course we would all give more if we had more, right? The government, a lot of people don't give to charity because there's nothing left after the government takes half their income.
The government has already taken so much.
Yes.
Why should I?
Yeah, exactly. I'm already giving it through the tax system.
Yeah.
So why should I give more? Look, before we had an income tax in America, there was massive charitable giving in the United States before we had.
More than now.
Of course.
Okay, it will be a totally different direction. We are heading towards socialism, if I understand you right. You're now heading for a new country, for Italy. I think you go to
we're going there. We're going there for the weekend. Yeah.
Italy is, in some views of Swiss people, even more socialist than others, depending on your view. It's a country with a high culture. You will love it. You will love the coffee there. And I want to thank you, Peter Schiff, for the time you spent with us and all the discussions and the questions and the answers. Very interesting. Thank you, Wolfgang, for your input.
For tagging me along
to organize this interview. And I hope that we can hear more of you in the future.
Yeah, well, I do my own podcast. People should listen at schiffradio.com or on my YouTube channel, The Schiff Report. I do 2 or 3 a week. Talk about the markets, politics, the economy. So make sure and listen out. Follow me on social media. I'm on Twitter a lot. Also Instagram, Facebook. I've got some kind of presence so people can follow me over there. And again, invest, go to our website. Europe Pacific Asset Management is epacfunds.com for anyone here in Europe who would like to have me manage a portfolio for them of dividend paying stocks. Also the mining stocks, again, that's where I think some of the huge gains are going to be. I think some of these stocks could go up, not only 10x, but 50x.
Better than Bitcoin.
Well, Bitcoin's going to zero at some point. So, but a lot of these gold stocks are going way up. And so we do have portfolios that we specialize in mining stocks, junior mining stocks. So if you really want to profit from, the remonetization of gold, way more, of course. Yeah. But, with the enhanced risk comes the potential for much greater upside. And so, we can build these portfolios for you at Europe Pacific Asset Management.
We learned about the Americans and that the economy is going down, that they consume too much and it's all financed by debt. What we now see is that one thing the Americans are impossible to beat is self-marketing. What you just did is great. No, that's really what we love with the Americans. They can stand up and speak freely about how good it is and what they do for everybody else. So thank you very much for this interesting lesson.